Ladies and gentlemen of the crypto space, we're live on a Tuesday, January. Shows you what time frame my brain is thinking in. June 1st. Basically the start of the summer, more or less. 11:32 a.m. on a Tuesday. Let's figure things out and try and get a sense of not necessarily actions to take. I'm in very firm belief that this is a period of time where inaction is the appropriate course of action. That's the posture that I'm taking with these markets. I don't think that action is warranted. We don't have an inclination to think things are going to continue exactly the way they were for the last couple months. That was a period of irrational exuberance where everything was just going asymmetrical on a daily basis, up and down and left and right. And that's no way. That's not a healthy market. A healthy market travels horizontally, responds to changes in external influences, external stimuli, whether there's um, a change in the macroeconomic landscape or even the microeconomic landscape, like a new feature or a new network or a new platform or some sort of new software is released, and that's what triggers change. But things just don't go straight up. Um, so what we have here is an experience that we just had over the last couple months. And I'm hopeful that the vast majority of persons I speak with and talk to have capitalized on that. I myself have experienced depreciation over the last 2 weeks. I could have done better. And interestingly enough, I've said on Discord that if I did nothing, I would have done better. So what that teaches me is that we're I was thinking too much opportunistically, and I thought I could sell and buy back lower. And it was just too volatile of a market. There was too much slippage, and there was too much risk involved with those types of transactions. And the appropriate course of action is for me to settle in on the ideology and methodology that I've talked about. I need to not reestablish, but reinforce the stories that I tell, even to myself, that make all the difference in how I can approach these markets and how I could share with everyone that listens to me uh, increasingly or decreasingly risky ways to engage with these markets. Now we're entering a period of horizontal price action, which could end up being depreciative or appreciative at the end. We have our hopes and our dreams, but hopes are irrelevant. What's pertinent is process. What's pertinent is methodology that is deployed to navigate whatever may come. We hedge our bets, and for instance, hedging our bets, gold and silver, physical, not the paper garbage. And that's only appropriate because if there's a hyperinflationary scenario, as Schiff and a lot of other folks would postulate, then those are going to be very lucrative assets to have. And we don't know whether the crypto space will be correlated or inversely correlated to PMs, precious metals. We speculate as much as we want. We know that Bitcoin has properties that are eerily comparable to gold, but there's no way to know how markets will behave. So what's pertinent is to have our hedges, have dollars as well, which is deflationary protection. And what do I always say? Dollars work in the crypto space, and that's extraordinary. So I myself am deployed primarily to crypto assets that I believe over the next couple of years will appreciate significantly. And during periods of depreciation and horizontal price action, what's most pertinent is those assets are deployed to crypto banking infrastructure, generating yield by means of rehypothecation, secured by over collateralization, and I'm able to take on debt positions to produce working capital to add cash to the balance sheet, deploying that in market making operations. So at this point, as many know and we discuss in Discord, you can borrow assets and be a market maker, but we don't have incredible and permanent loss protected positions on Polygon. But when you're dealing with cash, borrowing cash, that is an inherently impermanent loss protected position. So that's a great way to generate yield from equity or tapping equity to to make available working capital for purposes of generating income. This is all meaningful whether the market's rip roaring hot or especially now when it's trending horizontal. is pertinent is putting working capital to work. You don't want it to just sit there. You don't want assets to just sit there. What you want to do is put your assets to work. And in theory, you'd have enough principal, you have enough assets, you're able to generate meaningful working capital. And it means you're able to have an income, trim a salary. And that's exactly the way a business operates. It reaches critical mass where the amount of working capital is able to generate enough income to maintain business operations plus, and that plus is the salary. So once the business operation reaches critical mass, it's just the same as any other business. So that's the best way to look at this space. Just operate it like any normal business. Now, that's obviously not something that the vast majority of people do, but that's something I'm damn sure talking about because you now have a capacity to engage with these markets looking at it from a business opportunity perspective. How about that for an introduction? Traversing depreciative cycles, handling boring markets. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social good. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Killis is in the house. Demir's in the house. Yeah, it was a nice day. I went to the zoo with the family yesterday. Nice day off. RJ, Iran, Wave, Alex, always a pleasure. Active passivity, my favorite state of being. Damn right. Sir Joe, Pressure, Brady, X30D. Do as you say, not as you do. Do as you say. Well, don't do what I do. Do you. And what I say is ideology, which I hope to follow myself, and I would hope folks take that ideology and incorporate that into their own narrative. And that is the most meaningful way to communicate ideas. It's not for duplication, but for digestion and appreciation. You take the idea and you own it. You put it in the headlock. You make it your own. And that way, when you have ideas and you share them with the community, that means we're having an aggregation of ideas, and that's a big deal. How to approach X token perspective? Unknown. It's maximum risk. It's not rational nor responsible to have it as a significant portion of the portfolio. From a technological perspective, I myself, as an engineer, think it's very meaningful and a powerful technology, and we'll see how it plays out over the coming years. There's no yes, that's the appropriate way to look at such assets. That's basically the same statement I'll make for the vast majority of assets in the crypto space. 80-90% of your capital should be in 3-4 assets. Throw around 1%, 0.5% on startups here and there. All right, interesting. But vast majority of your capital is likely optimally deployed to macro assets. Mark, yeah, I tried that trick too. Sell, buy back cheaper. Didn't quite work out for me either. Nice to see you back in the seat. Yes, back in action. So there's many people that do capitalize on depreciative cycles. They sell and then they buy back lower. I did well after the market crash was Wednesday before last. I was able to claw back about an additional 30% of the portfolio, which put me back at about 30% down from all-time high. It was a heck of a clawback. They made a big difference, but there was a lot of risk in doing that. There's no guarantees. What goes down goes back up, and I played out perfectly. I actually bought the bottom and sold the top of that second leg that we experienced. You can't do that intentionally. It doesn't work like that. So I took a big risk and it worked out. It's not something I would ever recommend, and I am absolutely not doing that again. I'm not. I'm not going to do the methodology that the vast majority deploy. I am going to execute contrarian methodology, and in many regards, what I'm planning on executing is comparable to a HODL implementation. The difference is folks hold on to just random assets that are stagnant equity. This is this is not 2018. This isn't buy something that's a dollar, watch it go down to 5 cents, and oh, I hope it goes back to a dollar. No, this is assets that are working on the way down, producing yield and revenue on the way down. So this is different. This is balance sheet. And that's the story, which has overtones of HODL, but that's not what it is. It's different. It's much more robust and much more elaborate than any set of tools that we had in 2018. It's a big difference. Todd, when you employ rent for BTC and your BTC is protected, when you go back to convert back to BTC, you're paying current prices, not the prices you originally funded. BTC, no BTC. I'm not quite sure what you're referring to, my friend. Anytime you're swapping, you're going to deal with slippage, which is a massive consideration. So if you have 3% slippage on a trade to USDC, and then you have 3% slippage on a trade from USDC back to your asset, that means you're going to have a move in the asset's price of greater than 6% to experience any appreciation or any positive result to the trade. And that's a big burden. That's a massive burden. Because if it was 1% slippage, it would be 2% that you need to achieve. So slippage is a big burden, and it is often neglected. And I could have done better, and I will do better. And I learned from exactly what I did over the last 2 weeks, and I have a plan of action. I am enacting it, I am engaging it, and I'm going to execute it. And I feel confident, and I have conviction that what I'm going to do is the appropriate course of action. Driz is in the house. Good morning. Heirloom, a pleasure. Todd, lastly, I think best place for yield with RenBTC. You will have to come to your own logical conclusions of the best place. For myself, I believe Ethereum is outperforming Bitcoin. I believe Matic is outperforming Ethereum. I believe we're going to have volatility in the markets, and the L2s and side chains are going to produce a very interesting summer. Speculatively, obviously, we had DeFi summer last summer, and it's inevitable that we'll have some sort of exuberance again related to ultra fast, ultra cheap DeFi transactions. When? Who knows? But what's pertinent is the L2s and the side chains, in theory, should produce a bigger experience than anything that we saw last summer with Ethereum L1. It was still $20, $30, $40 a transaction. Now we're talking about pennies, fractions of a penny. So whatever we experience the next time around is going to be a magnitude greater in intensity. A question: where do you use Polygon protocol on Aave? I can't find the DeFi link on the Polygon site. So you got to add the protocol or the network to MetaMask. So you add Polygon. And then you're able to use the web wallet to transfer your assets to the protocol. Then you're able to use Aave and Curve and Sushi, and it's fractions of a penny. I like fractions of a penny. So Matic web wallet, you have to transfer to the network and drop by the Discord, and that everyone will help you through it. Great group of folks in there dealing with this entire complexity of what's going on in markets. In a very intelligent and very thoughtful way, risk considerate. Some folks are in stables, some folks are in assets. All folks are putting their portfolio to work, turning it into a balance sheet. And that's what's most important. Your composition of principal assets has to be respective of your risk tolerance. So some folks, there's no reason you can't have stables on your balance sheet. What's pertinent is the cash on your balance sheet is a combination of principal as well as debt, and that's your working capital. Obviously, you could deploy you converting the equity and assets into your debt position, generating working capital, and usually in the form of cash. As impermanent loss protection becomes more prevalent on the L2s and side chains, you will be able to take on working capital in the form of assets, and that's an extraordinary shift from a balance sheet perspective. Typically, especially from a business perspective in legacy finance, working capital is just cash. But in DeFi, with regard to market making as a business, you're able to take on assets as working capital, and that's quite a significant achievement. That's something novel compared to legacy finance. It's quite extraordinary. Todd, so if you rent BTC 40K BTC and BTC is now 30K. Shouldn't you convert back to BTC and realize that as a gain? No, because your Rent BTC is only worth $30,000 and you will not be able to get $40,000 for it. Rent BTC is equivalent to BTC. There is no price difference. Great times, just saying. My man. Yes, it is. Have you heard about Polygon's multi-sig attack vector? It is not an attack vector. Was curious to hear your thoughts about it. Yeah, it's not even relevant in my mind. Was pertinent is the multi-sig has some very well-known signers on it. Most important is the Curve team. And that means a lot to me. I think that's a trivial conversation to be had. A lot of people will overblow it. You know, Chris Black loves talking about that. But I think just the scale, scope, intentions, I love, absolutely love the macro narrative. Here's the macro narrative. Cosmos and Ethereum and Polkadot have the China narrative with the BSN. Ethereum has a global narrative. And Polygon has the India narrative, and I think that is just as exciting to me as the China narrative. Um, it is a great group of kids, young adults, that started Polygon, and it is a breathtaking experience of entrepreneurship, and we all should be proud of them because they built something extraordinary. And gut instinct says the entire country rallies behind these kids. They become um, like when you have sports people going to the Olympics, people rally behind them because they're representative of something successful and meaningful for the country, and that's something that I see with Polygon. There's countless millions and millions of kids working in tech jobs and engineering jobs and software development jobs. I myself ran a team about 16 out of Hyderabad a couple of years ago working for American Express. This is the type of team, Polygon, that will rally an entire country's kids that are tech hungry, programming, software, tech support. These kids work hard. I've worked with a lot of talented engineers in India, and I think this is that's a heck of a story. That's a heck of a narrative. You can have all the L2s you want. You can have all the side chains you want. That narrative is unaffected. It's the India story. It's a heck of a country with hardworking people. Um, that's what I think about it, RJ. Let's look at some charts real quick. I'm going to wrap this up. I started a new job today, so I got to get back to work. Bitcoin hovering, doing absolutely nothing spectacular. I've been looking at it on the weekly. Pull back, go back to work, and that's what we should have been doing this entire time. This is a heck of a price region. The fact that it's trending horizontal. Look at this congestion here on the weekly. That's a big deal. Whether it breaks up or down, personally, I'm leaning more to Ethereum. Ethereum is outperforming Bitcoin, as you can see here by the extremely large sim triangle, which has broken one, two, three touch points of resistance, and as of right now, flipped it into support. These trends, this is a massive, massive trend, and it takes time to play out. But what you're seeing here right now is a resistance, flip support, and then from a trifecta bullish confluence perspective, what you would do is look for the higher high. Then you have a confirmation of bullishness. Ethereum is outperforming Bitcoin in almost all regards, so my portfolio is skewed towards Ethereum. And then if you look at Matic denominated Ethereum, this is quite a nice chart, in my opinion, indicating that Matic is outperforming Ethereum. You had a big pullback and a massive, massive repurchasing. So folks were selling, 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 and then folks bought it all to the point where it couldn't push a lower low on the daily. You know, lower low would be down here. So this is not a lower low. And this is neither a higher high. So from an Ethereum perspective, it's a bit of either a symmetrical triangle in some regards or an ascending triangle. It's probably an ascending triangle aside from this wick above. So, but we'll see how it plays out over time. In U.S. dollar terms, I mean, look at these guppies. Look at the bullishness. Matic is outperforming Ethereum. This would take a huge amount of sell pressure to push down below these guppies to engage a bear market. You'd have to get down to 90 cents on the daily for this chart to even remotely look bearish. And to get down to 90 cents on the daily, look at these wicks down that were bought. And to top it all off, look at this giant candle to the upside. Everything that was sold was bought. That's an extraordinary notion. So this is the last thing I would be bearish about. We could see significant depreciation between here and wherever the market takes us, $20s, $30s, $40s. But what's pertinent is over a long enough time frame, the capital has to be working. Your balance sheet has to be working, generating revenue, accruing, and accumulating principal assets that are able to access the equity and produce working capital to generate returns, yield, and salary. All that fancy stuff. I'm going to wrap up today's stream. I got to get to work. It is 11:52 on a Tuesday, June 1st. As always, I thank everyone for joining. 46 people in the stream, 17 likes. We can do better. Stop by Discord. Great group of people. I'm in there all day long. It is fun, enjoyable, educational. Generally, just a great group of people. As always, tell everyone to subscribe. Thank you very much for joining. I wish you all a wonderful day. See you tomorrow.